In this video, we're going to talk about the new 2020 gift and estate tax rules. I'm Paul Rabley. I'm an estate planning attorney. I help our clients get and keep their legal affairs in order, and I publish a video every morning at 10 a.m. Central Time to empower you to protect your estate. All right, about 6 weeks ago, I did a 3-part video series on the 2020 gift and estate tax rules. But if you're going to sit through that, it's going to take you half an hour. There's 3 videos, each one's more or less 10 minutes. And I wanted to condense that down into one much shorter video so that more people can see it and know what they need to know. So let's make it short and sweet. Here we go. All right, so I want to cover really 4 things on this quick video. 1 is the basic exclusion amount. 2 is the annual exclusion amount. 3 is the sunset and clawback. And then finally, I'm going to give you some parting thoughts on where we go from here. All right, now let's go to the basic exclusion amount. It's the amount that someone has when they die that's not subject to the estate tax. And that amount gets adjusted every year for inflation. In 2019, it was $11.4 million. In 2020, it's $11.58 million. So that's a big number. It doesn't affect most Americans. But when it does affect an estate, there's a 40% estate tax. So everything above that $11.58 million number is subject to a 40% tax based on the fair market value of the estate. All right, so there's still some other things from the few years past that still exist. There's something called portability, which allows the surviving spouse in a married couple to use the deceased spouse's unused exclusion amount if it's elected properly on the timely filed estate tax return of the first spouse to die. So first spouse to die has a $4 million estate. That first spouse to die didn't use that first spouse's $11.58 million exclusion amount. They didn't use $7.58 million of it because they only had $4 million to use. So with the portability election, the surviving spouse has their own estate exclusion amount, but they also get the unused first spouse to die's exclusion amount. All right, so you can find out more on portability. The other thing that still exists is QTIP, and which allows for no estate tax to be paid regardless of estate size of the first spouse to die if the couple takes advantage of the federal estate tax federal estate tax marital deduction has to offer. And so all that still exists. All right, so $11.58 million basic exclusion amount for 2020. Next issue, annual exclusion amount, didn't change. It's $15,000. Periodically or every few years it goes up. It gets adjusted for inflation, but it only goes up in $1,000 increments. It was $15,000 in 2019, and it'll be $15,000 in 2020. Many people get confused into thinking that if someone makes a gift in excess of $15,000, someone owes tax. So let me give an example. Dad gives $115,000 to his son in 2020. Does dad owe any tax? No. Does son owe any tax? No. What dad has done has nothing to do with income tax. Dad, by making a $115,000 gift to his son, he has made a gift of $100,000 in excess of the $15,000 annual exclusion amount. What does that mean? It means when dad dies, instead of dad being able to leave $11.58 million from the estate tax, dad can only leave $11.48 million free of estate tax because he used $100,000 of his exclusion amount. That's all that means. So most gifts, even when they're in excess of $15,000 or the annual exclusion amount, they don't result in anybody paying any tax. Yes, there's a reporting requirement on a gift tax return, IRS Form 709, that dad has to complete showing that he made a gift in excess of $15,000 and used some of his exclusion amount, but no taxes due. All right, so enough there. Next issue, this sunset and clawback. The Estate Tax Law, Tax Cuts and Jobs Act of 2017, which really increased the estate tax exclusion amount. It does what's called sunsets. And so on January 1st of 2026, the estate tax exclusion amount will revert back from, and right now and up through 2025, it's this $10 million adjusted for inflation figure. So for 2020, The $10 million adjusted for inflation figure is $11.58 million, and that will keep going up a little bit each year until January 1st, 2026, when the law sunsets and the exclusion amount reverts back to $5 million adjusted for inflation. That number will probably be somewhere around $6 million will be the exclusion amount on January 1st, 2026 moving forward. So that's going to be a big deal for some people. And then there's this clawback question, which some regulations were recently finalized. Some people were worried that if they made a gift or used a big portion of their exclusion amount today, let's say dad gave away $9 million today, and he used $9 million of his $11.58 million exclusion amount, no tax. But what happens in 2026 when the exclusion amount reverts back to somewhere around $6 million? Is dad going to be penalized because he made this larger than $6 million gift before the estate tax law went through that sunset? So the regulations issued, no, under that set of circumstances, dad's exclusion amount whenever he dies would be $9 million, the amount of the gift, of the taxable gifts that he made, even though the estate tax exclusion amount reverted back to something less than $9 million. So there's some new regulations on that kind of what they call the clawback, and I'm going to post a video up top that you can click on to find out more about that. All right, so there you have it. The bottom line now is there are people, most people who are putting estate planning programs, most of my clients, most of the clients of other lawyers, most of them aren't going to die before 2026. Some of them are, unfortunately, but most of them aren't. That's just 6 years from now. So there are people now who may be sitting on and have done well, and they're sitting on, say, a $4 million estate. And they're like, what'd you say, Paul? The exemption amount is $11.58 million. Ain't nothing I got to worry about. Let's move on. But by the time 2026 rolls around, maybe that $4 million estate is now a $6 million estate. And now that individual, that estate, when that person dies, is going to be subject to estate tax under the rules as they exist now. So with the key to estate tax avoidance and estate tax reduction, with the key for most people being doing some little things over many years, such as the annual gifting, where you do this gifting either outright or in trust of $15,000 to as many people as you want to every year. And so when the permitted gifting amount is so low for a multi-millionaire, they can't get it out of their estate fast enough. So they've really got to start early if they're going to start a gifting program, because every dollar that they get out of their estate is going to save 40 cents or 40%, because that's what the estate tax is. So there are some people now with modest estates, modest is a relative term, that think no way are they subject to estate tax. They will be, unless Congress changes the law again for some reason. Now, this estate tax planning right now is being overshadowed by the new Secure Act, which, big news doesn't come often in estate planning. So when something comes up, it's a big deal. So this new Secure Act, the biggest provision of it is when you inherit an IRA from someone other than your spouse, you're going to have to pay the income tax on that IRA and take that distribution within 10 years after the death of the person that you inherited from, or the IRA owner, and you were the beneficiary. So when you, or looked at the other way, when you leave your IRA to a person other than your spouse, they'll have to take the funds out of the IRA and pay income tax within 10 years after your death. Used to be up until 2020 that the beneficiary, the non-spouse beneficiary, could take distributions, required minimum distributions, over their life expectancy. No more, it's 10 years. Okay, so that's kind of overshadowing all of the estate tax planning opportunities, but wanted to make this video to really condense from 30 minutes to 10 minutes kind of the 2020 developments in the estate and gift tax rules. I'm Paul Rabelais. We'll see you again tomorrow morning at 10 a.m. Have a great day.